Good day, respected colleagues. As always, it's Sunday. It's Den Strelkov and the ForexTimes project once again. I invite everyone to the community. Come, you won't regret it. We'll talk and learn a lot of new things, especially since starting tomorrow, I'll begin publishing forecasts based on Ralph Elliott's wave theory for trading instruments. Today, I'll add 4 trading instruments, tomorrow 2 or 3, and so on over the week until I reach forecasts for approximately 18-20 trading instruments, and we'll be conducting these forecasts on a regular basis. Well then, let's go. As always, let's consider the likely movement of trading instruments for the upcoming trading week, and I'll immediately ask for forgiveness. My terminal will periodically freeze, and there's nothing I can do about it today. I had problems with the server, so I had to reinstall the terminal on my Note, which I hadn't launched for several months. And now it will simply pull data from the Chicago Mercantile Exchange in a mandatory manner. You see, it's constantly tweaking. So it will periodically communicate with the server, where algorithms are installed that calculate data from the Chicago Mercantile Exchange. You see what it's doing? I can't fight this, so please forgive me. Well, let's go. The situation with the euro is quite simple. According to the Commodity Futures Trading Commission data, we see an increase in buyers by 10% and an increase in the capitalization of the trading instrument. Not by much, only 1%, but the money has still increased a little. This means that more buyers have entered the market and they have brought some money with them. Therefore, respected colleagues, it's likely that we have an impulse movement. Correction, impulse, correction. At the moment, we expect the likely movement of the trading instrument for the upcoming trading week to be in the bullish direction. Given that the price is currently situated in the strongest support range, I assume that on Monday, Tuesday, and the first half of Wednesday, we will witness an impulse movement followed by a correction. After that, we will decide on market entry for buying either with stop orders or from the range of 50% to 61.8% based on the Fibonacci grid stretched along this impulse movement. However, respected colleagues, I prefer the idea of the price exiting the profit range, market maker testing, accumulation level of put weekly option contracts totaling 277 million and 74 million, as well as the largest accumulation of open interest in put option contracts. So on Monday, Tuesday, and the first half of Wednesday, we'll test this level and then decide on market entry for buying. It's quite simple. I'll repeat it again. If we see an upward impulse movement on Monday and Tuesday, we'll decide on buying after the correction. However, if we see a downward correction to around 10,830, we'll decide to buy from that level. Concerning gold presents an even more interesting moment, and this moment lies in the fact that we observe an ascending trend strengthening, and we are currently within it. The trend strength is increasing, and we see an 8% increase in buyers and an 11% increase in capitalization to nearly $335 billion. Imagine in a week the value of black contracts exceeded $3 million. Now, regarding gold, we are most likely witnessing the formation of a triangle. As we know, a triangle is a corrective wave, which is also the penultimate wave. Therefore, if I am correct, and this is indeed a triangle, exiting the triangle to the resistance range at 227, where we will decide on market entry for selling. However, this is most likely not going to happen before the next trading week, not in the upcoming week. If I am wrong and the price still exits this probable triangle downwards, forming something other than a triangle, then we will look for probable entry levels for buying. These probable levels are nothing other than an accumulation of hedging put options with their premiums and market makers' loss levels. If the price reaches this strongest support range, we will decide on market entry for buying. These are the two moments. You may wonder how to handle the triangle. It's best to handle it with a pending order above the base of wave E, assuming this is a triangle. Therefore, waves A, B, C, D, E are complete, and there's no need to enter here for buying. However, if you're eager, you could also enter with a pending order above the high of wave E. The idea is if the price goes up, you profit. If it goes down, you wait until it reaches the strongest support range to buy. That's the plan. But respected colleagues, if we indeed have a triangle here, then the plan afterward is to sell immediately. The trading instrument is the US dollar against the Swiss franc. The thing is, we have a short position open on this trading instrument. At the moment, we see a report from the Commodity Futures Trading Commission showing a 4% decrease in buyers, indicating a probable corrective decrease in this trading instrument, that is, downward. Furthermore, we see that the price is already in the strongest resistance range, namely the call options holder with their premiums and the upper boundary level, which is the market maker's loss level. This is the second moment, and the third moment is that I will now switch to monthly option contracts. Basically, when we observe a 5-wave pattern, the likelihood is that we have waves 1, 2, 3, then waves W, X, and Y. At the moment, if I am indeed correct, and we had an impulse followed by a correction, and yet the decrease in buyers suggests that we are more likely to undergo a corrective decrease downwards, then this decrease can easily turn from a corrective one into a larger downtrend. Respected colleagues, if such a scenario unfolds, the downside potential is very, very, very significant, colossal even. Therefore, if you enter the market for selling, hold the position and look at 200, 300, 400, 500, 700, and 800 points. We will observe how the movement continues further because there's a fundamental rule in financial markets, namely to minimize your losses as much as possible while letting your profits grow. Let your profits increase while losses, on the contrary, decrease. Thank you very much, respected colleagues. I invite you to the community. Come and learn many interesting things. There haven't been any negative reviews yet from anyone who has talked to me about what we do and these interesting levels we discuss. Thank you very much, respected colleagues. Have a great evening, everyone, and goodbye for now.